She got in. She got in Bitcoin and 60 something thousand. I forgot what the price was. She got in at 60 something thousand, and he tried to talk her out of it. So when you know what you want to do, when you call in and tell the broker, this is what I want to do. Had the confidence like she had. She said, "No, I want to get a Bitcoin futures contract." He tried to talk into looking at some other markets, and she said, "No, I want to buy one Bitcoin futures contract," and she's doing well on
What's her name? Maybe she needs to adopt a old cripple guy.
it. uh, Glad to be on, everybody. I am glad to be on. Very, very excited. I get excited. Well, I'm always excited, but I get extra excited this time of year. This is my favorite time of year when it comes to trading. So we're coming upon my favorite time and it gets me excited. So it's very, very close. But you happen to know what I was talking about, Johnny?
Yes, sir. Sure. I sure do.
I love it, man. I love it. Well, let's get us started. Let's get us started. And let's turn over to Barbara and make sure we get our very important stuff out the way first.
All right. Here is our disclaimer for Futures Commodities Trading Group. Trading and investing carries a high level of risk, and you could lose some or all of your investment. Trading commodities or any other financial instrument may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may incur. This means that you alone are responsible for your actions in any trading or investing activities.
Thank you, thank you, thank you. Oh, let's get started. We as always, we get started by going over quizzes that we may have throughout the week. And I'm pretty sure I think it was 3 quizzes that we had to go over. And let's get some clarity on these quizzes, see how we came out with the quizzes. Anybody who can grab them, Dr. Melba or Barbara, either one, doesn't matter. But if we could grab those quizzes and let's go over those, that'd be great. Johnny, I was thinking, man, it's so important when it comes to when it comes to our trading, the charts is so important, and being able to make sure you understand the charts is a very, very important thing. It's a big deal, and wanted to make sure we was clear, make sure we spent time, give enough time. Wanted to see if we could put a little bit more time on going over the formations, just to make sure everybody's clear on it because it's so important. How you feel about that, Johnny B?
It's fine with me.
If got anything else you want to take a look at, we can. I just thought we would just spend a little bit more time on the charts with the formation.
All righty. And then your question to me earlier sure brings up a topic we could sure discuss as well.
Excellent.
Why this is your favorite time of the year.
Right. Yes. All right. One of the ladies, are y'all able to get the
Yes,
quiz?
I have the first one up.
Okay, great.
Yeah, it was Monday, March 11th. It says, in some cases, gaps form on the charts. These gaps are filled at a later time in most cases. A, false, B, true, C, never, D, all of the above, E, none of the above.
Yes, yes, yes. We wanna definitely make sure we understand that. And actually, Barbara, we can change the settings after we go over the quizzes. Because I do.
Delvin, you'll want to unmute yourself again.
Yeah, Mr. Wright is muted, everyone.
Okay, yeah, we definitely want to go over these quizzes. So I think this is one that I I think everybody understands. I think we was all on the same page, but let's see. Anybody want to tell us what the answer is?
Be true.
True. Yes, I agree.
True. Anybody got something different from true? Yeah, answer is true. Yeah, these gaps do form on the chart, and at some point, in most cases, these gaps are filled. Most cases, and not every single time, but in most cases, these gaps do get filled. Excellent job. What else did we have?
Okay,
Let
the
me
next-
say
the
let me
next-
say let me say something real quick on this.
Okay.
If anybody was listening to what is it, Rural Network, where they have the farm report, they talked about gaps being filled this last week on different commodities. And so it's when you hear the people that are reporting, the commodity prices and what's going on, and they talk about gaps being filled, then it just validated everything that we're talking about.
Mhm.
And so that was all over the reports this week.
Oh man, thanks for sharing that, Johnny B. That was on U.S. Farm Report.
It was on the Rural Network from 8 o'clock in the morning till 12. Twice an hour they report what's going on in the grains and in the livestock market, and they talk about some of the fundamental things that go on, and that's on DirecTV and Rural and Dish Network as well.
Yeah. Awesome. Yeah, gaps are very, very important to understand. They form on the chart, but these gap charts don't like gaps, so they're looking to get filled at some point. Excellent. What else did we have?
Okay, the next question. Top and bottom formations are actually support and resistance areas on the chart. Top and bottom formations are actually support and resistance areas on the chart. A, true. B, false. C, never. D, all of the above. E, none of the above.
All right. Let's go. Who knows this one? What about Shaw? You got the answer, Shaw?
Hello. Yes, I want to go with true.
I want to know who can tell me, based on these two animals that we say represent and are used to identify the behavior of the market. What what other two things do these animals use represented as? There's actually two two things that these animals are used to represent, right? And I'm gonna give you a hint. There's a city in the U.S. that these two animals are used. Anybody know? Matter of fact, I'm gonna give you even more.
Chicago,
What was that?
Chicago,
I'm gonna
Chicago,
give you a bet. I'm,
Chicago
what was
Bulls,
that?
and the Chicago and the Bears.
Very good. Very good. Very good. The Chicago Bulls and the Chicago Bears. Now, why would the Chicago Bulls and Chicago Bears be represented in Chicago? Anybody know where the largest futures exchange is? In Chicago. So it makes sense that they got the Chicago Bulls and the Chicago Bears. So I just wanted to throw the bonus quiz in, Johnny. Um, See who would get that. All right. So we said we wanted to go back into talking about the formations to make sure everybody understand, to go back over looking at what that looks like on the chart, because we want to be clear. But before we do that, Johnny, you say you want to talk about something related to the question I asked you?
Yes, sir. Can anybody tell us why this is his favorite time of year?
Why is this my favorite time of year when it comes to trading?
Something to do with corn.
Yeah, pretty good answer. We keep going. What's important about this time of the year?
She's hot. Who up? What that, Tanisha? She hot. What is it, y'all? Every
Is it
year
because
around
this
this
is
time of
planting
year.
planting season?
What fundamental information would come out during this time of the year?
I heard two people speaking, but I didn't hear what they said. What they say, Johnny? What was that?
What fundamental information would come out during this time of the year?
You listen to the program?
Pardon?
I
Say
thought I
again?
heard it, but it were two people talking. I thought I heard it, but I wasn't sure, Johnny. Somebody unmuted, but I couldn't hear him.
Come on, folks, make a guess. There's all kinds of stuff. There's more than one. There's more than one
This question,
right answer.
Zoe says in the text box, she says in the message section, she says planting season.
Okay.
That's
Who
Zoe.
else?
nobody else have anything? Johnny, you don't got him with this question?
Pardon?
Look like you got him. Nobody know why I'm excited about this time of year when it comes to trading?
It's amazing to me because you talk about it all the time.
Tanisha was real high. I tell y'all, if you high or you cold.
Come on, Tanisha.
Is it the grains growing season?
Bullseye. Yes. It's that time of year coming up on the grain season. That's my favorite time of year. I love trading, period. All the groupings. But the grain gets me fired up when it comes to the grain season. I love trading the grains, right? So now that it's coming upon the season, as it start to get close, I start to get more excited.
Okay, so folks, let's real quick. I won't burden you with trying to answer a question, but what kind of fundamental information could impact the price of the grain market during this time of the year, going forward? All right. Could be the weather. Okay. Do we have rain? Do we have snow? Do we have late freezes? You know, how many acres are the farmers planning on planting this year? Is another fundamental information. There's all kinds of information. What their progress is, you will hear it as it goes across the country, what their progress is in planting, whether they're ahead of schedule or behind schedule. There's all kinds of fundamental information that comes out during this time of the year, all the way through planting season. And then from there, then and we're dealing with new crop information. And when is new crop? Okay. November for soybeans and December for corn, right?
Correct.
Okay, so then we have how much corn is left in storage? Okay, there's all kinds of fundamental information that impacts the grains. So, but that fundamental information causes volatility, and we don't care which way the prices are moving. We just want to be able to, we want to take advantage of that volatility. All right. So that's kind of a just real quick thought of things that you need to watch for and look for as we go through this time of the year.
Yes. And you'll hear us talking about the grains a lot coming up here in the next week or two as it starts to become the beginning of the season. Its season is different depending on the region of the country. So, what I really love about it is that, I had never thought about any of the process when it comes to, growing and planting and all this stuff when it comes to that. But if you're thinking that it's just getting out there and planting and growing the crop, it's a whole another strategy to it. It's not when I found out that it's actually a real strategy to how they have to do that. And there's wonders, like Johnny said, the progress has to be, in stages, but it also has wonders that they have to work with. For example, there's the planting season, but there's certain time when the plant needs to be finished with the planting so that they can start the growing part. And that, if whether it's a factor like Johnny talked about, it can affect them getting planting done by a certain time, which can then affect the outcome of the crop because they need to plant by a certain time to grow by a certain time so they can get harvest by a certain time, depending on the region that they're in. So it's a lot to it, but it's an exciting time. I love the grain season. So that was the answer for why I get excited this time of year. Yeah, Johnny, let's get into making sure we understand these formations that form on the chart. They form on the chart, and it's in my opinion, one of the most important things that we need to make sure we understand, because we use the charts, we make our decisions from the charts, but we need to make sure we can read and understand the charts. So if you're not able to start recognizing the formations that we watch for, then that could be an issue when it comes to you getting started with trading. And we need to make sure before we go into understanding this, here's another thing I want to make sure we talk about. When it comes to the formations that's forming on the chart, we're only watching for 3 formations, okay? And these formations form on the chart over and over and over again. But the thing about it is, they are, like the quiz said, the top and bottom formation, they are just support and resistance areas on the chart. When you see us saying 1 and the 2 and the 3, that 1, 2, and 3 are support and resistance areas on the chart. That's exactly what they are. we are identifying them as a 1, 2, and 3 because we want to see all 3 of them take place and form on the chart so that we can get a complete formation. But it's just support area and resistance area. That's what those 1, 2, 3s are. Then I think I jumped ahead a bit. Before we jump into the formation, I asked everybody if they would, do some homework and watch a video that Dr. Melvin and Barbara made. Outstanding job they did on navigating and understanding how to use bar chart. And I wanted to know, get some takeaways. Can some people, share, what was your takeaway? Did you watch the video and what you take away from all we can use and take advantage of once we understand how to use bar chart? Who watched the video?
Julie, of course.
Oh, we know Zuli watched. She would come in. Zuli, did you want to share anything about the video, Zuli?
Well, there's just so much there for me. I was really intense. I think I watched it 2 or 3 times. And I really thank you, first of all. It really helped me to understand the 1, 2, 3 top and 1, 2, 3 bottom, of course, sideways. And it just became clear for me that 1, 2, 3, when to get in, let's say the second, it's not just 1, 2, 3, but the 2, 3 that continues afterwards. Because the 1, it's depending on where the top is and the bottom. It's hard, it's challenging for me to even explain because I'm a visual person. So it's like to be able to, it's like 1, 1, 2, and 3, and then going on the 2 on the top, we're going into the top. But then you still got to wait until the second, until the breakthrough and the next level of the 2 in order to be able to really determine whether it's safe enough to get in. But also it just was beneficial for me to understand too that where Ms. Barbara came, so that she came from Forex. So in how different that was for her in coming into this space as well, just because we've been in other kind of trading or learning in other places. This is it's just a new, it's got to think different, prepare ourselves differently. So that was something that's a takeaway for me, because I had been somewhere else learning, and all of a sudden you totally have to get it's a new mindset for me. And the same with Dr. Melva, that to be able to really clear these 2 ladies that have been so fantastic in sharing their knowledge. But just going back, just really staying focused, just really focus on the 1, 2, 3 top and 1, 2, 3 bottom. And for me, it's also that what I came out of this experience is to really take the coaching and be disciplined about it, making sure that, yes, as it was said in the past in other recordings, is what Mr. Eric said about the discipline involved. So the same thing here, not to be jumping, not to be emotional about it, but just stay focused on the 1, 2, 3, and not look at this time for me. It's not looking for anything else. And as you just finished saying, support and resistance about that.
Excellent. And I hope we all get a chance. If we didn't get a chance, take time to watch this video. And did anybody get more understanding? Did anybody get some better understanding on how to navigate and use bar chart watching this video? Did the lady do a great job, or what? Did you actually see all the tools you could take advantage of and how to use the tools? Did y'all get a chance to really watch the video and see that?
I know I did get to practice, and I did open up bar chart at the same time to be able to look at where the tools were, where the markings for the fib. That's, we don't use Fibonacci here, but it's just doing it the longer way, that adding the 2 numbers and then dividing. But here, looking at the fib, looking at the trend line, making sure that there's the parallels, support and resistance. So that was very helpful to find where to locate them.
Excellent, excellent. Yeah, it's a valuable video. I want to thank the ladies again. They did an outstanding job. If you haven't seen that video, you probably don't know what all you can take advantage of and use when it comes to bar chart. But bar chart needs to thank these ladies for the outstanding video they did. Right, it was a great job. So watch that video if you haven't watched it, and let's look at some charts. Let's see what the charts look like, the formations that we look for on the chart. Barbara, if you could share your screen and take us to the chart for a top formation, and tell us, how to get to that chart.
Yes. So when you first come on to bar chart, your screen will look like this. And you want to click on the tab that says Futures. When you do, it says Futures Market Overview. And it says Full List. So if you click Full List, it's going to take you to all the markets that's in the futures and commodities market. And depending on what you're looking for, so we're going to go to April lean hogs. That's a top formation chart. So that's under livestock. So we're going to click on livestock. And from there, you would find the month that you would want to look at. In this case, we're going to look at April. That is considered to be the front month. You want to take notice of the volume that's over here because you want to make sure you're in a contract month that has high volume, because there's nothing worse than getting into what you say to be a perfect trade, but you can't get out of it because it don't have enough volume in it. So make sure you pay attention to this particular column right here. But in this example, we're going to click on April 24.
If you will, Barbara, can we look at hogs instead of cattle?
Okay, hold on, I clicked on the wrong one. Let me go back.
April hogs. In this example, we are looking at a 1, 2, 3 top formation. 1, 2, 3 top. That's the example we're finna look at on the April hogs.
There you go. This is lean hogs April. And we're gonna look at April. It takes you to the price action page, price overview page. We're gonna click full chart. And here is our lean hogs. April 24, 6 month.
Awesome. Thank you. So here's a April lean hog chart, and we are looking for a 1, 2, 3 top. Do we have one, Johnny B? Do we see a top formation on here?
Yes, sir. Right
All
now,
right.
right now we do.
Yeah. And let's go over again. Let's make sure we know what a 1, 2, 3, what that is and what it looks like on the chart. So we said that the number one would be our highest price that's on the chart or our lowest price that's on the chart. In this case, since we're looking at a top formation, the number one would be the highest price on the chart. So when we put a number one there, that's saying that we have our highest price on the chart right here. This is the resistance. The market will trade down, in this case, away from the number one. As it's trading down, at some point it changes direction and starts to go back up. And when it's changed direction, it hit what's called support. And it left a number two. We can see that that's a support level, a support area where the market may have some trouble at. So coming down from the number one and then change its direction, start to trade back up, leaves behind a support level, which is now number two. So as it's trading up, but the market changes direction again, that leaves another resistance on the chart, which is now our number three. We had the market make a number one, trade down, decided to change direction, leaving us a support level, which is our number two, trade up from support, change directions again, start trading back down, and that gave us a number three. Now, Johnny, if the market traded away from the number two, but kept going instead of changing direction when it made that number three, what would we have then?
Going back towards number three.
Yeah, we thought
If it kept going, if it kept going, it would give us a new number one.
Exactly. If the market would have kept going when it left the number two and kept trading all the way up to what a number one is, but traded on higher, a little higher and past the number one, we would have then had a new number one. And what that means is that we will be now watching for a number two. But in this case, the market didn't trade up and beyond the number one. It changed direction before it got to where the number one is. And that's how we have our number three. We have what's called a 1, 2, 3 top formation on this chart. All right. Barbara, a question for you.
Mm-hmm.
We always want to make sure we have a confirmed 1, 2, 3. And we see a market trade and form a 1, 2, 3. And then it started to trade down. It confirmed when it traded where?
When it traded down to retest the number two.
When it traded down to test the number two. That's when we had a confirmed 1, 2, 3 top on this chart. Now, when we had that 1, 2, 3 top, and then we have a trade down to where that number two is, I can tell you right now, Devin would have been getting short the market right below that number two. But that 1, 2, 3 top formation, that's what we're looking for. That's a 1, 2, 3 top, means the market has started to top out, made the top, and we can now look at the market maybe to change direction. That's what the top means. That the market is trying or making an attempt to change direction. It's been an uptrend, and now it's doing what was called topping out, and now the direction is changing to where we may be seeing the market go into a downtrend. And that's how we have our formation. Anything you want to add, Johnny, before we look at the bottom?
Can it fake us out?
Say it again?
Can it fake us out?
Absolutely.
Okay, so if we'll notice, it made a new two, didn't it?
Mm-hmm.
Can you put a two there, please? Now, the real question is going to be, whether it makes a new 3 at the top of that green, or it continues to trade up and passes the 3 and goes back to the 1. If that happens, then that failed. Correct? However, but if it heads back down to today, tonight, tomorrow, and goes towards forming a new number 2, that's even more confirmation. You know, so not to get into stops and all that stuff, but you know, one of the things on the formations I wanted to kind of review. Can you move your chart up just a little bit and go down, go to the left? Okay, right. Okay, so when we reviewed the 1, 2, 3 bottom, okay, and the market changed direction and went up, it trades within a range. And one of the things that Delvin was talking about was, or Zuli was talking about, the fact that you get multiple 1, 2, 3s. If you look going up on that short uptrend, from the 1, 2, 3 bottom, you'll notice it trades within a range. And this is one of the things Josh, I think, refers to quite a bit when he's always asking us. So if you look at, if that is a 1, 2, 3 bottom, so 1, 2, 3, okay, and then comes back to another 2, okay, and 3, you'll notice that it's a higher high and a higher low. All right. So those are some of the things we're watching on the chart to try to give us, let the chart talk to us. Okay. And when Josh talks about a short trend or a short uptrend or long uptrend or stuff like that, then you can see these charts talk. I hope that makes sense.
Yes, yes. All right. Thank you, Johnny B. So we saw a 1, 2, 3 top. We could look at a bottom on this same chart, or we could go to a different chart. Let's look at a 1, 2, 3 bottom. And I want to look at all 3 of the formations, and then I think it's a good idea we watch a quick short video that helps us with this too. Let's look at a top formation, Barbara. If you can go to
Yes, sir. We're going to
that,
May, canola May is a
Yes.
common formation.
All right, May canola. Bet y'all didn't know you could trade canola in the futures market, did you? All right, so we talked about on the chart that we have a number 1, which will always be our highest and our lowest price on the chart. And in this case, we're looking at what's called 1, 2, 3 bottom, which means that the market has been trading in a downtrend and now it's starting to make a bottom. And when it's making a bottom, just indicate that the market could be changing in direction. So we see the lower price on the chart, which will be number 1 in this case, will be support. In the other example, top formation, the number one was resistance. So the lowest price now is now support. The market trades up away from the number one, away from support, and now it's trading up and decide to change direction. When it changed direction and start trading back down, it left what's called a resistance area. Now we have a number two on the chart. As the market start to trade down from the number two in the direction where the number one is, where it doesn't trade down to the number one, it now gives us another support level. This number three now is formed on the chart because we did not go down and exceed what the number one was. And now we have a 1, 2, 3 bottom. And Barbara just told us it's confirmed when we see the market trade back up and test the number two. This is what's called a 1, 2, 3 bottom. Now, in the same example, if the market would have continued, instead of making the number three, if it had continued down lower than what that number one is, we would have had what's called a new number one. And we would just still keep watching for a bottom formation. But in this case, it didn't. So we do have a 1, 2, 3 on the chart. This is lean holes, right? And what we're looking at.
Canola.
Yeah.
Canola.
Canola. This is canola. This is a 1, 2, 3 bottom, and now we tested the number two, and it's starting to trade in a slight uptrend. In this particular chart right here, Johnny B, anything you want to mention on this 1, 2, 3 bottom before we look at a channel?
Well, the fact that it confirms, trades past the number two. Yeah, I think the main thing I want everybody just to realize that it's real easy to see this after the fact. But remember, when we hit that 3 and started back up, we have no clue where it's going from this point. So this is the importance now to where, we've made our entry point at just above the 2, and now we're going to make sure that our stop loss trails so we can take advantage of, if it's an uptrend, all that we can get out of it, but not risk, more than 10% of our portfolio, by not having a stop or having a stop too low.
Excellent. So we see the top formation, and now we see the bottom formation. And the more you look at the charts, the more you'll be able to recognize and spot these formations on the chart. And they happen over and over and over again. And the more you spot them and the more you start to, see these formations, you'll get comfortable with, at some point, trading them. You'll be able to have confidence and trust these formations that not always are you going to be profitable on the trade. But what John is also teaching you is that we want to make sure, I always say when it comes to trading, the way to be a successful trader is to become a real good loser. We always want to, be a good winner, but the real good traders in the market are those that are real good at losing, controlling and protecting yourself when you get in the market. That's what makes a great trader. So, Barbara, let's look at a sideways channel so we can watch a short, quick video. The sideways channel is the third and final formation we watch for. And I love the sideways channel. I love all three of them. But I love when I see a sideways channel on the chart. And I like to take advantage of when I see it too. Well, let's look at a sideways channel, Barbara. Where you going now?
I am going to one of the financials, 3-month SOFR, June 24.
Yes, SOFR. Boy, yeah, we have a formation, a sideways channel on this chart. When you look at a chart with the SOFR, it was in the channel for a very long time. And actually, when I look at the SOFR chart, the 5-year chart is what is the one that I want you to really pay attention to. How about that, Johnny B?
I don't like that chart at all.
Yeah, look at how it made.
That sideways channel, when there was only one way you could play that, and you said to play it, you played it, and I didn't, and I missed it.
Yeah. Oh man. Anything else on that chart that looks familiar?
Yeah.
Yeah, a huge gap on that chart, ain't it?
Yeah.
But yeah, but let's see what a 1-year chart looks like too. Barbara. Yeah, big difference, right? But a sideways channel, what is really going on when we see a sideways channel? The market gets into a narrow channel, and you may hear some people refer to it as the market's consolidating, and it gets into a tight channel and it's trading it within this little tight range, and it's trading sideways along the chart. And we watch the sideways channel because we know it's going to do what's called a breakout of the channel. At some point, it's going to break out of that channel either up or down. But channels form on the chart, and you'll see it become narrow and more narrow and more narrow. And it's a great opportunity to take advantage of on the chart. I like it when I see them. I love to trade them. It's the easiest to trade out of the three, in my opinion. But I love all three of them. So I hope everybody is getting a better understanding, because when we look at the charts, these formations are what we're watching for. You'll see me post charts in the group saying, that it's maybe making a top or a bottom. Keep watching. That just means I'm putting this on my watch list. I'm just sharing with you all what I'm adding to my watch list. This is a market that I'm watching for it to make a complete top, bottom, or it may be trading sideways. Oh, Johnny, I was thinking, man, we in the past we've always, watched a little video that kind of helps with the clarity and understanding, gives a little bit better understanding on the 1, 2, 3. And thought might be a good idea to watch that video as we wrap it up.
I agree.
And I just want to make one note before we watch the video, that the 1, 2, 3 formations have been around for a long time. All right. And I'll say it like this. My mentor became famous for making these formations popular. He didn't invent the formations, he just made them popular. But in this case, you'll see in this video, they're going to be showing the formation, and they kind of tweak the formations a little bit. It's a little different from what you may just heard me cover, where you'll see he may be using multiple ones, where I just explained to you that we leave the one for the highest price and the lower price. But in this video, he's going to explain to you how they're trading it a little bit more aggressive and using multiple 1, 2, 3s on the chart. And that's wanted to make sure you understood that before we go into the video. But it's an excellent explanation of how the 1, 2, 3s work. And if we can, Barbara, Dr. Melba, if Barbara, if you can grab that video and let's watch this quick video right quick.
If you only have a few $100s to invest right now, click this link right here because I want to show.
Hi everyone, this is Eric from Traders Helping Traders with this week's Tricks of the Trade. This week I want to talk to you about the ever humble but super powerful 1-2-3 formation. This is such a basic support and resistance formation that we have a tendency to overlook it. But it is one of the most reliable signals and one of the most powerful reversal signals. And I'm going to show you in a minute how you can use it as a continuation signal out there. All right, so what is a 1-2-3 formation? 1-2-3 formations were made popular by Ken Roberts. He traded the 1-2-3 formation and the channel formation. That was pretty much the whole essence of his course. But he was very strict with his 1-2-3 formation. I'm going to show you a little modification on the 1-2-3. But essentially, the 1-2-3 is when the market makes a new low, that's the number 1 point, goes up, makes a new point of resistance, that's the number 2 point, and then the number 3 point occurs when the market comes back down and challenges the support on the number 1 point. Now that would be what is called a 1-2-3 bottom formation. And let me just play this forward a little bit so that you can see what the 3 point's going to look like. All right, here we have the 1 point, which is our low. Here we have our 2 point, which is our high. And then here we have our 3 point, which is new support. And remember, support is our red-green bar combination. It came back down here. It did not exceed the 1 point, and therefore we have a 1-2-3 formation. The way the 1-2-3 formation is traded, I'm just trying to get rid of the lines here so that you can see it a little better. Maybe I can't do that. Okay. The way the 1-2-3 formation is traded is that the signal confirms when the market trades above the number 2 point. Now, us support and resistance traders know that we can get in a little bit earlier, especially if this number 3 point showing support has a reasonable sized bar attached to it. This particular instance, the size of the bar forming the number 3 point and the entry above the number 2 point, pretty much the same. So the way it works is we would use our number 2 point as our entry. And in this instance, we would go long if the market breaks the number 2 point. And you can see a few days later it did, and we would be long this market. Traditionally, the exit stops go all the way back down here below the support point. Now that would depend a little bit on your own current situation. Obviously, the further back you can leave the stops, the better for your trade because it will enable you to ride out some market swings. But I have been known to leave stops as close as a day or two behind a trailing stop. We're just going to play this forward. And you can see that in this particular instance, we got a pretty nice little run out of it. Now what I want to show you, and I don't know why that line is there, but we'll get rid of that. What I want to show you is that you can also use this as a continuation pattern. So let's say, for instance, you didn't see the original 1-2-3. Now the pattern is going to repeat itself so long as it is forming. In this instance, we're in an uptrend, so we're looking for it to form higher resistance and higher support. Remember, that's our basic definition of an uptrend from a support and resistance viewpoint. So long as the market continues to form higher resistance and higher support, we will continue to look for opportunities to buy. All right, so here we have an instance now where the market has essentially made another 1, 2, 3 formation, but this time the number 1 point is down here. We have our number 2 point, and we're going to be on the lookout for our number 3. So let's play this forward. Let's see where the number 3 comes in. Aha. Okay, that's looking a little bit like support. So now we have our 1, 2, 3 formation repeating itself. And what we can do, I'm going to make there, that'll be easier to see. What we can do is we have new support here. If you're going to be more aggressive on this trade, you can enter above the support. So in this particular instance, you would enter above here, being the high of this bar, and we could cover the trade below the number 3 point. Now this should be familiar to most of you because I do this a lot. I wait for the market to give us new resistance, come back down, show us support, and then I'll put in a buy order. Now if you're following a secondary indicator like momentum or RSI or something, then you'll be looking for it to confirm that we have indeed a shift in momentum, and that will help make it a little bit easier to buy or will increase the probability of your trade. But even without that, this is a very valid buy signal. You can also trade the 1, 2, 3 again in the traditional format and not buy until the market trades above the number 2 point. That's entirely up to you. Entering above the number 2 point makes for a stronger signal in most cases. But of course, you also have the opportunity to profit, sometimes considerably, between the support formed by the number 3 point and the resistance by the number 2 point. Okay, well our number 3 point is still holding, and right now it looks like we could make this trade even a little bit tighter here. We have, if I back this up one day, we have new support here, right, with our red-green bar combination. Okay, now we are, hold on. Okay, I made us sweat for a few days, but it looks like it finally let us in. It's laboring. Oh my goodness. Come on. There we go, finally. Okay, I'm just playing this forward. Now, here we would have actually crossed our number 2 point. So you could have entered long here as well. But what I want you to see is that the pattern is going to repeat itself yet again. So you had actually multiple instances where you could have reused the 1, 2, 3. You could have reused it here. You could have gone 1, 2, 3. You could have gone like this. 1, 2, 3. And if you were really sharp, you probably could have caught this one too. 1, 2, 3. So you can see that not only is it a reversal pattern, but it also gives you an opportunity to enter a trade that is already trending. And once again, we have, at the moment, we have our 1 point down here. Looks like we have a possible 2 point. Yes, we definitely have a 2 point. So we have our 1, our 2, and now we're going to be on the lookout for our 3. Oh, something happened here. Did you catch this, what just happened? Remember what the definition of our uptrend was? We have to see the market make higher resistance and higher support. But look at what happened here. All of a sudden, the market has broken through our old support area. So now we might actually be looking at a reversal of our 1, 2, 3 bottom formation, and we might be seeing the opposite happen, a 1, 2, 3 topping formation, where the market makes a new high or a high, comes back down, makes new support, and now we're going to look for it to challenge this high, the number 1 high, and then fail. And sometimes you have to be Really on the ball. Okay. Now that looks like it's a 1-2-3 formation. This is a 1-2-3 formation, but it will not confirm a 1-2-3 until it has technically broken the number 2 point. Once again, you do have resistance here with our green-red bar combination, and you could look to sell below the number 3 point. But the safer trade is to wait for the market to actually to confirm. Okay, so far so good. Oh, it's struggling. Okay, and in this particular instance, if you had sold here the number 3 point, we would have been stopped out. Now, one thing I want to bring to your attention as well is even if you see a 1-2-3 formation like this, and you caught it the wrong way, another signal is to sell or buy the break of the number 1 point. And why would that be? Well, that's because the number 1 point is a very significant area of support or resistance. So in this particular instance here, if we had seen the 1-2-3 like this, you could have bought the market as it broke through the number 1 point. If back here you had seen a breakout here below the number 1 point, you could have sold here, even though it was relatively short-lived. It isn't always. Many years ago, when gold was falling instead of reaching new record highs, I saw a 1-2-3 formation in gold almost every month or so, and I kept looking for an opportunity to buy, only to see gold prices continue lower and lower and lower. Don't ask me why, but it took me a long time to figure out that I could actually sell a failure of the number 1 point, and I made a lot of money doing that when the market gave me a 1-2-3 setup and never completed, but actually went in the opposite direction. So those are the 3 things you can do with a 1-2-3 formation. You can look for the 1-2-3 tops and bottoms. You can look for the intermediate 1-2-3s and as an opportunity to trade the market with the trend. And you can buy or sell a failure of the number 1 point as that, and that's a valid signal as well. So keep an eye on those 1-2-3s. They're very powerful, very simple, and very profitable. And that's this week's Tricks of the Trade.
Love it. Love it.
Michael Oman, his Tricks of the Trade just was stolen. Just teasing, Michael.
All right, man. What you think, Johnny? I love that video, man. It really helps with the understanding of how the 1-2-3 works on the chart, right?
Absolutely. I think at the tail end there. Okay, I want to kind of, if you don't mind, I want to ask forgiveness, but say I stand corrected on something I said the other week when we were talking about trading a or I want to clarify, trading a sideways trough or a sideways channel.
Mm-hmm.
If you are scalping, okay, and what I meant by that is that you're selling the highs and buying the lows, right? And you're working that system, that's one thing. But if you're not in the trade at all, and you're looking for an entry point, then what Delvin said and what y'all were saying last week is correct. So if you put your sell price above the high, all right, meaning if it changes direction, right, or your buy at the top, so that if it breaks out to the upside, you're in the market is one, and if you put the sell in for a breakout to the downside, that is also correct. But that's if you're not in the market at all. But I think what was stated in this video was absolutely the key when he talks about if the number one fails, it's a good buying opportunity, or on either side. And that's basically what they're saying there is if it breaks out on a sideways trough to the upside or the number one fails, then that's a good buying opportunity.